the hidden operational cost of paper forms. Many organizations still rely on paper-based forms for key customer and internal processes. On the surface, this may seem like a minor inconvenience rather than a serious business issue. In reality, paper forms often create bottlenecks that slow down service, increase manual work, reduce data quality, and frustrate customers. Whether the process involves opening a bank account, approving a loan, signing a tenancy agreement, onboarding a supplier, or issuing an employment contract, paper introduces friction at every stage. Customers are asked to print, sign, scan, and return documents. Staff then need to review the forms, chase missing information, re-enter data into internal systems, and correct errors caused by handwriting, scanning issues, or OCR failures. What looks like a simple signature process quickly becomes a chain of avoidable delays and operational inefficiencies. Replacing paper forms with digital forms and online signatures is not just a cosmetic upgrade, it is a practical form of process improvement. Done properly, it can remove choke points, improve the quality of captured data, speed up turnaround times, and create a smoother experience for both customers and staff. Where paper creates choke points. Paper-based processes tend to cause problems in the same predictable places. The first issue is customer friction. A customer may receive a document by email, only to discover they need to print it, sign it by hand, scan it, and send it back. If they do not have easy access to a printer or scanner, the process stops there. Even when they can complete it, the experience feels slow and outdated. In many cases, customers also need to re-enter information that the organization already holds elsewhere. The second issue is delay. A paper document often moves through several disconnected steps: sending, printing, signing, scanning, receiving, checking, reviewing, correcting, and archiving. Each step adds time. If one field is missed, one page is not signed, or one date is incorrect, the document may need to be sent back and restarted. The third issue is manual effort for staff. Once the signed document comes back, employees often need to key data into core systems manually. If OCR is used, staff may still need to check and correct the extracted values. This duplicates work and diverts staff from higher value activity. The fourth issue is poor data quality. Paper forms usually allow inconsistent formats, missing fields, illegible handwriting, or vague answers. Even scanned PDFs can contain incomplete or incorrect information. When this poor quality data flows into downstream systems, it affects reporting, compliance checks, customer records, and operational decision-making. In other words, paper does not just slow down one moment in the process, it weakens the whole chain. Why this matters more than it seems. Some organizations treat paper forms as a minor inconvenience because the process still works. But the real cost is broader than the form itself. From a customer perspective, paper-heavy processes create unnecessary effort. Customers now expect services to be quick, intuitive, and digital. A paper signature requirement can make an organization feel slower and less responsive than competitors. For onboarding and approval journeys, even a small amount of extra friction can lead to drop-off, complaints, or reduced trust. From an operational perspective, paper creates hidden waste. Time is spent on document handling, rework, chasing missing information, reviewing scans, correcting OCR output, retyping fields, and storing documents. These are all costs, even when they are spread across teams and not captured in a single budget line. From a data perspective, paper weakens consistency and control. If information is entered once by the customer in a structured digital form, validated at source, and passed directly into systems, the quality is usually far better than a handwritten or scanned alternative. Better input quality means better downstream processing, fewer exceptions, and more reliable records. This is why digital signatures should not be viewed as a narrow document signing upgrade. They are part of a broader effort to redesign and streamline business processes. What a modern digital signing process looks like. A well-designed digital process does far more than replace a handwritten signature with a click. In a modern workflow, the document is usually generated from structured data rather than created manually from scratch each time. The recipient completes the necessary fields online, with rules in place to ensure required information is entered correctly. Validation controls can prevent common errors by applying mandatory fields, minimum and maximum values, formatting rules, and contextual helper text. Once the form is complete, the process can include internal review or approval before it is issued externally. This is especially useful where contracts or regulated forms need oversight before being sent to customers. After approval, the document is converted into a signable format and sent using an electronic signature platform. Once signed, the final signed document can be stored automatically while the captured data flows directly into a database or operational system. That means there is no need for staff to re-enter the same information manually after the signature is completed. This matters because the real benefit is not the signature alone. The value comes from connecting document generation, form capture, validation, review, signature, storage, and system updates into one continuous process. Are electronic signatures legally valid? One of the biggest reasons organizations hesitate is uncertainty around the legal position of electronic signatures. In practice, the question is often not whether electronic signatures are valid at all, but what type of electronic signature is appropriate for a particular document or risk level. Across the European Union, electronic signatures are recognized under the eIDAS framework. This is important because it provides a legal basis for trust services and electronic signatures across EU member states. It also distinguishes between different levels of electronic signature, ranging from simple electronic signatures to advanced electronic signatures and qualified electronic signatures. For many business processes, a standard electronic signature may be entirely appropriate. For more sensitive or regulated transactions, stronger forms of identity assurance and evidence may be required. The key point is that organizations should not assume that paper and wet ink are automatically safer or more enforceable. What matters is whether the chosen signing method is suitable for the transaction, supported by a strong audit trail, and aligned with legal and compliance requirements. This is where good process design matters. A digital signing journey can capture timestamps, signer actions, IP address, document versions, approval history, and other evidence in a way that is often more traceable than a paper process. That said, organizations should still assess their own use cases carefully. Some documents may require a more specific legal approach than others, particularly in regulated sectors or where cross-border enforceability matters. Choosing the right tool. There are now many tools available to support electronic signatures, including well-known platforms such as DocuSign, Adobe Acrobat Sign, and Dropbox Sign, among others. While cost is often part of the conversation, price alone is not the right starting point. The better question is, what does the organization need the platform to do? For simple signature requests, many tools may be sufficient. But if the goal is broader process improvement, the platform should be assessed against more than basic signing capability. Important factors include template support, audit trail strength, workflow options, API access, integration with internal systems, identity verification features, multi-party signing, approval routing, reporting, and ease of use for customers. A cheap tool that only captures signatures may still leave most of the surrounding inefficiency in place. A more capable platform may cost more initially, but create far greater value if it eliminates manual work and reduces processing time. This is why organizations should assess signing tools in the context of the full process, not as isolated software purchases. The choice of platform will also be influenced by your geographic location and the applicable regulatory framework. For instance, organizations operating within Europe are subject to the requirements of eIDAS. It is therefore essential to ensure that any selected solution is fully compliant with relevant local legislation. Furthermore, depending on the specific legal requirements and the cost considerations associated with third-party providers, organizations may also evaluate the feasibility of developing an in-house electronic signature capability. In scenarios where only simple electronic signature standards are required, building an internal solution can represent a cost-effective and practical alternative to external platforms. Common objections, and why they often fall short. There are several common objections to moving away from paper. One is that wet signatures feel safer. In reality, paper can be lost, scanned poorly, altered, or filed incorrectly. A well-implemented digital process may actually provide stronger evidence through timestamps, audit logs, document version control, and signer history. Another objection is that customers prefer paper. In some cases, certain customer groups may still need a paper option, but that should not prevent the organization from digitizing the main process. In most cases, customers value convenience, clarity, and speed more than the format itself. A third objection is that implementation is too complex. It is true that redesigning a process properly takes thought, but the complexity usually already exists. Paper simply hides it inside manual workarounds. Digitization does not create the inefficiency, it exposes it and gives the organization a chance to remove it. Finally, there is the concern that compliance will not allow it. Often, the real issue is not prohibition, but uncertainty. Compliance, legal, operations, and technology teams need to work together to decide what type of signature is appropriate, what controls are needed, and how evidence should be retained. Measuring the impact. Organizations considering this shift should treat it as a measurable improvement initiative. The benefits can be tracked through a range of practical metrics, such as turnaround time from issue to signed completion, percentage of incomplete or rejected forms, average staff handling time per case, cons, number of manual corrections required, OCR correction effort, time taken to open an account, issue a contract, or approve a loan, data entry error rates, customer drop-off during onboarding. These metrics help move the conversation away from opinion and towards evidence. They also make it easier to build a business case for change. Conclusion: paper forms often survive in organizations, not because they are efficient, but because they are familiar. Over time, however, the hidden cost becomes hard to ignore. Delays, duplicate work, poor data quality, frustrated customers, and weak process visibility all add up. Replacing paper with digital forms and online signatures is therefore about much more than convenience. It is an opportunity to remove operational choke points, improve the quality of captured data, strengthen auditability, and create a faster, cleaner customer journey. Tools such as DocuSign can play an important role, but the real transformation happens when the organization redesigns the full process around structured data, validation, review, automation, and integration. That is where the biggest gains in efficiency and customer satisfaction are found. For organizations still relying on paper-heavy workflows, the question is no longer whether digitization is possible. The more important question is how much inefficiency they are still willing to tolerate.